Earlier in the program, to my point, we had Dave Calhoun, of course, the CEO of Boeing, who joined us. And he said, Larry, it's going to be perhaps 3 to 5 years for them to get back to 2019 levels. When you hear that, how do you have to adjust your business? And do you feel like you've already done it to adjust for that new reality?
David, good morning. Thanks for having me on. I had an investor call earlier, so I missed the interview with Dave, but we speak frequently, as we do with all of our customers here. I think what we said on our call, and I would repeat here, is that the first and most important step we take as a company in the face of this pandemic to make sure we come out on the other side a better, stronger GE is to embrace the reality of what we're seeing. And clearly the pressure is going to be no greater in the short term and maybe over the medium term for us than it will be in aviation, given the airlines are trying to conserve cash, parking planes, bringing flight schedules down, postponing, in some cases, orders of new planes. That hits us, and you saw that in the first quarter numbers that we didn't particularly like and acknowledge that are going to be more challenging here in the second quarter, which is in turn why we doubled the amount of cost actions that we're taking in aviation up to $1 billion and cash actions up to $2 billion, all the while broadening those same efforts to a $2 billion level on the cost side across our company, $3 billion on the cash side. David, I don't think you're ever done. I don't think you're ever done preparing or reacting in a moment like this. I don't think we've taken a particular view as to whether this is a 2-year or a 3-year or a 4-year recovery. We're mindful of those conversations. We just need to make sure that we're taking the appropriate actions here in the short term while protecting all the things that over decades have made GE Aviation such a strong franchise in the commercial aerospace industry.
And to that point, when it comes to liquidity, where a lot of investors, you can imagine, are focused, you end the quarter with $47 billion in cash. And you said on the call that's really to cover capital long-term debt maturities now through 2021. And actually, after the April actions, you were down to $30 billion in maturities for 2022, I believe. Is it going to be enough, Larry, or do you need to do more?
Well, I think with the closing of the biopharma transaction, the $20 billion that we received, giving us that $47 billion of liquidity at the end of the quarter, we're well positioned from a liquidity perspective for what we see in front of us. David, we would never say that that's all we need once and forever, right? Part of the reason we stepped back from offering a formal guide today was there is still, I think, a great deal of uncertainty out there relative to the economy at large, how the pandemic impacts our various businesses. So we're going to control what we can control. We're pleased to have that liquidity position. Again, the cost and cash actions will help us a great deal here in the short to medium term. And we will we'll play it forward from here, mindful that we want to make sure that we continue to bring those leverage levels down. We're unlikely to hit the targets we had envisioned and very much thought possible just weeks ago. But make no mistake, we are committed to making sure that we bring down those leverage levels in time.